The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tommy O'Brien, and Darrell Martin.
Welcome, folks. Tom O'Brien. We are going to have Darrell Martin. He was on, but he's off right now. We'll get him back. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 73. You get the Nasdaq off 20. S&Ps are down 8. We have the gold contract trading down $2.30 at $1,314 an ounce. Silver is down 22 cents at $18.99 an ounce. Platinum's off 17, $1,008 an ounce. Bonds, you get the 10-year note up 2 ticks, down 2 ticks. 30-year bond up 10 ticks. We have light sweet crude trading flat at 48.22, and good old King dollar is up 2.75 at 95.66. And if you haven't test drove the Nadex product, folks, come over to our website at TFNN. You'll see the banner on the top of the side. You can hit the banner. They'll bring the exchange up. They'll put $25,000 of paper money into your account, and you can see how these defined option contracts trade. Volatility here again.
I know, right? Triple digits right off the bat, and then we've pulled back to positive a little bit since then, right? But
yes, and what you have, folks, if you're, and inside the Nadex platform, folks, you can trade the indices, you can trade commodities, you can trade the currencies, and currency-wise, what we had out here last night is that if we just take a look at the pound, you're going to see. Evidently over in GP. Over in Britain, they decided that they've already pulled the trigger. The day they pulled the trigger, the vote, the pound went from 150 to 132. What happened, I believe, last night or our morning, because they're open 8 hours than we are, is that now they're setting a timeline. And it looks like what they wanted to do is that they wanted to try to have negotiations with the European Union first.
Okay, right.
And the European Union say, no, we don't want to do that.
Negotiations like before the negotiations,
yes,
right?
Exactly,
Yeah,
exactly. Okay. And the bottom line is that now they're saying that they're going to have a full, I believe it's going to be like, the countdown has started, and let's see, to show the traditional importance. And what they've been talking about this morning is that it's almost going to be like a hard Brexit instead of a soft Brexit.
Yeah.
And what it's done inside the pound, folks, is that it's just hammered the pound, pretty good too. I guess 129 to 128. It's only a penny, but that's still a big move for currency.
Oh, yeah. They were talking about it on CNBC and this morning.
Now let's go to our man. We got our man Darrell Martin with us. Darrell Martin, what's going on?
How's it going, man? How you doing?
I'm doing great, man. Yourself?
Doing fantastic.
Well, there's no doubt we get a market. You get a market. We were just talking about the pound, basically last night and this morning, losing it. This is the lowest the pound's been in years compared to the dollar. If we bring this up, boy, do you see this? This is pretty intense.
I mean, that would make sense, right? Why would you ever have
It
pounds
felt
versus
like
dollars?
a deviation and a half. It was a big fall.
I'm sorry?
Night.
He said one deviation and a half.
Oh, okay.
Yeah, it was a big move. So, and then, we had dollar yen was moving a lot last night, too.
Look at this. I'm putting this up. Wow. I just put this up on a quarterly chart, and the only time that the pound has been traded, that's pretty amazing, actually, that it's traded in what year is that?
March of 85. March of 85. Yeah.
March of 85 is the only time that it was under 123 or 128. That's pretty intense, man. Wow. Well, I guess they have their work.
They're in uncharted territory, right?
They have their work cut out for them.
They do.
They have their work cut out for them. And when you're taking a look at the Nadex platform, folks, particularly at the beginning of the week, which is nice, is that you have daily contracts, you have hourly contracts. And you have weekly contracts.
You do.
You know, so depending on, you know, whether you're bullish or bearish, let's see where these things line up.
Now, what market would you want to take a look at? I pulled up the S&P, but would you want to look at the NASDAQ 100 or the S&P?
I think what we could do is take a look at the NASDAQ 100 first, because there's plenty of bulls out there, too.
Sure.
And you're at the highs, and there's plenty of bears. I mean, I'm just saying, but the NASDAQ is at highs.
Sure.
You know, the S&P is going to have to make it through that September 9th. So it'd be kind of neat looking at the NDX 100 saying, okay, if you're going to go, you know, are you going to make it or break it?
So I'm just pulling it up. These expire on Friday at 4:15.
Okay.
Let's cram it down even a little more. So right now we're at 48.55.
Yeah.
And, you know, 49.18 to the upside. So what is that? 68, like 63 points to the upside.
Okay.
Is risking 22 to make like 78.
Okay.
Which I know those are the ranges that you like to kind of risk one
totally.
to make three type trades.
Right.
And on the downside, be like 47.98. That's like 57. That's where you're risking 25. Excuse me, to make 75. So there's some big moves, you know.
There's
a lot of good plays that are going to be coming up this week.
There is, and when we come back, folks, we're going to look at that, and we're going to turn around and look at the S&P too.
I'd say from those prices, the market knows that there could be 5 days of action coming.
Yeah.
So those are big moves for risking one to make three.
They are.
Yeah. They're 1.5%, pretty much. Almost, yeah.
You stay right there, folks. Tommy, Darrell, myself, we're coming right back. Dow right now is down 56, Nasdaq's off 17.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tom O'Brien, Darrell Martin, Tom O'Brien. We do appreciate you growling and prowling with us out here. Right now, we get the Dow off 70, Nasdaq's off 20, S&Ps are off 9, and we were looking at the NDX 100 binaries, and so in both cases, this is where it gets kind of interesting too.
Why don't you even pull it up on the Bloomberg what you were looking at?
Yeah.
Just the. Go ahead. Continue. Those numbers were outside of the ranges where it traded.
They were
at all of last week.
So when you take a look at it, whether you're a bull or a bear, folks, when we were setting those up, meaning the one was set up at 49.18 at the high, and the high period is like 48.92. So you got to blow
and that's
that
going
high
from
away.
September 22nd. You're going back, just anywhere in the recent 5, 7, 8 days.
Yes. And then at the low, the number that you need is 47.98, and the
we
low
had 4,800.
4,800. Last week. So I wouldn't dig either one of them.
Right. So we said, you'd want to look at ones that would be closer then.
I would. And then what that ends up doing too is like, okay, I think the SPY's a better deal anyway, but I wanted to look at these first.
Now, that's really searching. Now, things change quickly because, the fact that you're risking 22 to make 78 can be a huge difference to risking 40 to make 60.
Right.
So you bring it back and you can get in at about 38.50 at 48.82.
Yeah.
Now, that's definitely within those ranges. And but you go from risking 1 to make almost 4 to risking 1 to make 1.5.
Right.
Just to evaluate that. That's, why there's a big difference.
And the number comes down quite a bit too.
Yeah, right.
It really does.
But still, that's,
No.
Yeah.
I see, Darrell, you're looking at the oil, huh? Let's put
checking out oil right now.
Let's put your screen up here. See what we got here.
Did a nice little deviation move from low to high, like negative 0.5 down to 0.5 up.
Okay.
Been pulling on back down, just broke through settlement, broke through magnets from yesterday, or, previous trading day, and broke through point of control, heading down to lower ice, and which would be right back at the 0.5 deviation level. So I'm looking at, potentially a 47, 50 or so.
Yep.
Target.
Yeah, well, what is amazing is that what the oil did too, folks, and this is where it's going to be, the bulls and bears fighting. CLX6. It looks to me that this can make $50, man. I mean, it's giving it up on price right now, but what has happened is that it finally made it over, that 48.38 level. It's dying on the vine, though. It's gonna be today's a big day.
Yeah.
Because it made it over. Now it's dying on the vine.
Yeah.
So thus far it's a failure. But we'll see. At the end of the day, we get 195,000 contracts right now, which isn't bad. It's not great, but it's not bad.
It is pretty amazing when you think about just that oil now is like the norm is $45 to $50 in our head, and gas at $2 is like the norm.
I know.
And it's now almost stable at those levels.
That
alone is pretty remarkable. We'll see if it holds. But
what also is crazy is that when this always happens, like on this contract here, the next swing high, folks, is exactly $50. It's like, oh yeah, how does that work? 50.00. It's like It's just funny. Do you know what I mean? It's like, okay, so $50, like, because it was funny. The last time it went up to 50. I said, well, it's never just going to stop at 50. Why is it going to do that? Everyone was thinking that 50. And sure enough, right on the button, $50, it just smack dead stops. Isn't that crazy, Darrell, though? Do you know what I mean?
It is. Yeah, I mean, because those round numbers, and it's just...
Yeah. And...
They shouldn't mean anything, right?
They shouldn't.
In theory.
I know.
But that's why, you always say, in theory, because in theory, they shouldn't mean anything, because they're just as valuable as any other price level.
Right.
But no, they're not.
Right.
They're more important,
But you got humans trading.
That's right, exactly.
Yeah.
But that's not how it works, because everything just isn't in theory, because in practice, it actually matters to people, and so that moves things. Right?
And what happened, folks, as we were going up to it, I mean, not everyone, just about everyone said, oh, it's going to go to $50.
Especially something like 50 too.
And that's what it did.
That's like 100. You know, that's
exactly.
like that's
it just went there and like started. So when I was looking at that this morning, I'm saying to myself, this is crazy, man. And then, okay, I just took it. I was like, really just going to go hit 50?
And that'll be, I mean, if it comes close to 50 again, that's all anyone's going to be talking about.
Yeah.
What's it going to do at 50? Is it going to go above 50?
People are going to
Can
start.
oil go above 50? That'll be that's an easy conversation to have. Like, everybody will be having it.
Right, and here, just swap gears with you just for a second, folks. We'll go over because in the Nadex platform too, of course, we trade the oil, but you trade the natural gas. And what has happened? So natural gas numbers are Wednesday, oil's Thursday, and this natural gas, every time it's getting up to $3. This is the equation.
Okay.
They sell the heck out of it, man.
Sure.
And it's like even the last time it was up there, it spiked at 314, I think, 316 on this contract.
Yep.
But
that seems to be like the exact line that
that's
it just
the number.
peaks its head above and then comes back down and trades and peaks its head above and comes back down and trades.
And in this case, the bottom of the range here is at 280.
Yep.
So we're at 288 right now. Pretty wild, man.
Like basically you're saying it's like 88 to 3, 88 to 3, 88 to 3.
I'm sorry. Yeah,
280 to 3, I think.
280 to 3.
280 to 3.
Yeah.
Okay.
Which is beautiful, which is huge. The ironic part is that they actually did sell it off again. It stayed above $3 for 2 days, and that was it. And sold the heck out of it again.
We'll have to listen to Andy Hecht. I wonder what he has to say about all their. I like his
there's
fundamental.
your weekly binary play.
Yeah, so I'm gonna go over. Let's go over to the Nasdaq, right? Not the Nasdaq. I'm gonna go over the S&Ps. So if we take a look at the S&Ps.
Well, I was even saying on natural gas.
On natural gas.
It's consistently dropping below $3.
Oh, for a week.
Right?
Oh, that would be nice.
Because I mean, it's not that like it hits 3 to the magic number and falls back down. It may stay up for a day or two or whatever, and then fall back down. So what you could look at is when we get up to that 3.
Yes.
Then, selling off.
Down to the 280 and buy one. Yeah.
Exactly.
No, that's a good. Yeah.
You could also look at the probabilities on profit of doing a sort of a butterfly and neutral trade.
Okay.
Where you're buying a contract that's slightly below 280 and selling one that's slightly above 3.
Yeah.
And so you get a better like 1-to-1 risk reward ratio, but as long as it keeps staying in that range, then you can profit. And you might even have to trade it on the swing. You might not be able to get good pricing like immediately on both sides, right?
Right.
But like right now it's down at near the 280 level. So you could go in, you could look at a 280 now, but if it flies up more towards the 3, let's say by Wednesday, you're selling one of those. Let's say selling it for $25. And let's say you can buy one for $75. Then you'll have a $50 risk on a $50 reward on a high probability, a greater than 50-50 probability trade, because it can stay flat or it can move up or down in those ranges.
That's a big range, man.
Yeah.
Still profit. Yeah.
Yeah,
so
I like that
that's
trade.
sort of a very simple weekly. If you see a range-bound market like that and you see that pattern happening, you're like, well, how can I take advantage of it without having to be perfect at timing it?
Right.
You go, what strike would I be comfortable with buying? And this is a cool thing. You don't have to watch it at all.
Right.
You can literally stop right now. We can look at the end of the week contracts.
Yep.
Okay. And so all we do is we log into Nadex, we go over, we pull up our weeklies.
And we actually have, Darrell, if you look at even our den, I think the weeklies, for some reason the indicative is not showing there. We'll see if we can get it up. It does that occasionally, but the markets are live with bid offers at those different price levels.
Yeah, that's why I always say have regular charts. We'll talk about exactly how you can place this order and walk away here.
All right. You stay right there, folks. Darrell, Tommy, myself, we're coming right back. Dow right now is down 62. Nasdaq's off 18. S&Ps are down 7.5. We're going to be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we have the Dow down 77, Nasdaq's off 20, S&Ps are down 9, and we're talking with our man, Mr. Darrell Martin, and we're setting up a weekly. He's walking us through how you do a weekly butterfly inside this gas contract.
So let's say we're looking at this range of 3 to 2.8.
Yes.
Okay.
Yeah.
Then we can go over here and we can look at all the weekly contracts, and we can go, what strike do we think that, it may break below it, but by Friday, okay?
Yeah.
This is a set it and forget it, walk away trade.
Okay.
All right? By Friday, what price do I think it'll be above? And what price do I think it'll be below? So my range.
Yes.
Okay. So if we were going to pick a price, we could look at, 2.75 to give us a little wiggle room if we wanted to.
Yeah.
So we could pull that up and open up a Nadex ticket there. And then right now, it's trading, a little bit higher. Let's see, 2.75 trading like 92.95. Okay? So we could also go higher. We could go to 2.85. Just, whichever, you want to be pickier about on that.
Yeah.
But anyways, when we pull that up, actually, I think I clicked on the wrong one. Let me go over here. There we go. Okay, so now when we pull that up, we can set in what price we want. So if we want and I'm just throwing out this is probably giving us more room than we need. But if I had it at, say, 2.75, I could say, when this gets to $75, I want to buy it.
Okay, yeah.
Put that in the price. I'm not used to using their. So I go in here and I could say, I'll buy it at $75.
Okay.
On the buy side.
Yeah.
So, And so I'm expecting it to stay, above that price. Obviously, they're not going to, let me get in it until we're ready on that.
No, totally.
Because right now it's at 83.50 right now.
Yep.
And let's see, I want to sell. Now, what are we willing to sell? So what do you think would be a good strike on that?
Well, that'd be the higher end we're looking for, right?
Right.
Meaning up in the $3 level is quick. It's pretty far away from it right now. But bottom line is that Wednesday when the numbers come out.
Yeah, exactly. So because we have that natural gas inventory report coming out too, which can make things fly around a little bit.
Exactly.
So we're not really worried about getting filled when we put this order in.
Right.
Okay, we're just putting it in. All right. So, if I have an order at say 2.75 to buy, and then I can go in and I can say, okay, I want to sell. I mean, we got 3.05.
Yep.
That's pretty close to 3. We got 3.15.
3.05 is good. It only hit the 3.15 once.
Okay, now is 2.75 too far away, or do we want to go closer to 2.85?
No, it's not, because right now we're at 2.85, right?
2.88.
Okay.
Yeah, we're 2.88.
All right, so if it drops a little bit, we're going to get filled on that 75.
Right.
Okay. So right now we're just going to have a working order of 83.75. We go over here, and so now we go to the 3.05 ticket. Open that one up. Okay.
Yeah.
And so now I'm going to do it. I'm going to put in a sell. I mean, you can do 1, you can do 50, you can do whatever.
Sure.
But I'll put it a sell at 25. Now I'm going to change the size to 1 just so we can see the map.
The correlation. Yeah, right.
Yeah, equal for everybody. It makes it a little bit easier. All right, so here's what happens. I can put this in. I hit place order.
Yeah.
On the contracts here. So if I say place this order and place this order, then they're both going to go into working.
Right.
Okay, so like that one's going to go into working. Go right there. That one's going to go into working. They're not filled yet.
Right.
The market's going to have to oscillate to get me filled.
Yeah.
Okay. If they get filled, and this is, I think, the most important thing for our users to understand here, is the most I can make on the one I'm buying is $25.
Right.
Now, of course, I could do 50 of them, make a lot more, but this on one.
Yep.
Okay. So most I can make is 25. The most I can lose is 75, which seems like a really bad risk-reward ratio.
Yep.
Okay. Now, on the one I sell, the most I can make is 25. The most I can lose is 75. Okay. Again, a bad risk-reward ratio. But when we put both together, then it can't finish both above 3.05 and below 2.75 at the same time.
Yes.
Like when the market closes at 2:30 whatever on
Friday. Yep.
Then it can't be at both
Exactly.
prices. So I mean, it could go up to 4. It could go down to 2.5, but it can't be at both.
Right.
So one, and it's sort of a weird thing to say always when you're talking about trading, right?
Yeah.
But literally, as long as I don't mess with the trade, okay? If I just leave it alone and both sides fill, one will win. One will profit. One side, because it can't finish above or below both.
Right.
So if we know that at least one side is going to be profitable, because either it's going to finish between them and they're both going to be profitable, or it's going to finish above 3.05 and 2.75 strike that we bought is going to be profitable, or it's going to finish below 2.75 and the sold 3.05 is going to be profitable. Okay? So one of the trades, as long as both get filled, one of the trades is going to be profitable. So I'm going to make $25. I may make 50 if it stays within that range as of expiration. And here's the thing: I could lose, but I will lose, or I could lose. Sorry, not will. Could lose 75 on the other side if it doesn't stay between the range. So if I will make 25 and I may lose 75 also, then my worst case scenario is I lose $50.
If both of them get filled, right? Now, what does it take for those for both of them to get filled? From where we're at, like 288 right now?
Okay.
Where do those where does the market have to swing to as each one of those gets filled?
Well, there's a couple ways to do it. I have a calculator in here that does that for you too. But one of the things that
just like in general, I just want to understand,
Well, you can't just do it in general. You have to look at the price ladder because binaries have so many things involved in their pricing because they're at delta. But what I can do is I can go, where's the market at right now? Is at 2.83. Okay. So I can go, I want to get filled on this contract up here. There's 3.05. I want to get filled at $25, right?
Right.
So what I need to do is I need to go. How many strikes can I look down that it has to
Sure.
move? And so 23.25. Oscillation can hit $25, right? So I basically one strike move there, which in this case is what 0.20. All right. So if we had a 0.20 move to the upside, then I should be able to get filled on my 3.05. Okay.
Yeah.
And what I'm doing is I'm looking at the price ladder. So see how like the price went from 425 to 23.25? If the market was 0.20 higher than this price, would
I
be
think
on
point like
0.05.
one. You're 10 cents. Right?
Oh, you're right. You're right. Actually, that's even better. Yes. Yeah. My math is off. So I need more coffee.
That's
but
right.
0.10 exactly. So yeah. So if it moves up 0.10, 10 cents, like you said, then right around there, maybe like 24, 25. Like just a little bit of a movement. We saw how much that price changed. This one's going to change really slow till it gets closer to that 10-cent move. But if we move about 10 cents, maybe 11 or 12, as of this moment, then we ought to be able to get filled on that upside.
And then we'd have to swing, though, all the way to get filled on the other side?
Well,
Yeah.
we're pretty close. We're really close on the other side.
You're right. We're only 3 pennies away. Yeah, okay.
Yeah, we only need a few pennies, and we're gonna be there.
Nice.
You stay right there, folks. Darrell, Tom, and myself, we're coming right back. Dow Industrials right now are down 55. Nasdaq's up 14. S&Ps are down 6.5. I'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Tommy O'Brien, we are talking about the Nadex platform, folks. And if you haven't test drove it yet, great time to do it. Come over to our website at TFNN. You can hit the banner, bring it up. They'll put $25,000 of paper money into your account. Bottom line is that we have window dressing today, tomorrow, and then it's game on. Oh, and happy Rosh Hashanah. So it's the Jewish New Year out here, too.
That it is, I believe.
Yeah. There's some kind of a saying, too. It's either buy or sell on Rosh Hashanah, and what's the...
Better get that one right.
I know.
But, well, back on the natural
Yes.
gas position, we were talking about doing a butterfly, and we were talking about if both sides get, which, I mean, we don't need much to get filled on one side, right? So we basically said if it moves up 0.1 up, it's basically 100 ticks, which sounds huge, but that's not a big move in natural gas. To the upside to get filled, and we said to the downside, right now based on price on the 2.75, then we're looking at
It's like 13 pennies or something, right?
Yeah, exactly. Yeah, I mean literally it's like 0.13, something like that move, and we could get filled on that side as well pretty easily. And again, I have a calculator on here. I won't want to bring it up to make it all complicated, but there's a calculator you can put in price, and he'll tell you what the price of the binary will be if it moves to that price. But the main point here is if we do get filled on both sides, we have a $50 risk and a $50 reward and a really wide range of 2.75 to 3.05.
Yeah.
Now, the one question that is going to come up is, what if I don't get filled? Well, who cares?
Right.
Then you don't, whatever your margin gets released and you're back, whatever. Well, what if one side gets filled and the other doesn't?
Yeah,
That's the one.
That's
fear.
the real question.
Okay.
Exactly.
Wait, so what happens then?
Because I don't like that $75 risk, $25 reward without having that other $25 reward on the other side.
Right.
Well, there's a real simple math calculation on binaries. There's one price, that's one of the statements I've been making since I started trading Nadex. So it's become pretty popular. But the one price you can count on, okay, is $50. Okay, that you put me on is $50. If the market gets, if natural gas gets to 2.75 or gets to 3.05, then that binary is going to be worth $50. So
Right.
plus or minus the bid offer, whatever. But the mid price is going to be right at $50. Okay.
Yes.
So what I'm going to do,
And that
now,
is consistent. Yeah.
Yeah.
exactly, and that's it's always because a binary
Right.
is a delta, which is a reflection of probability, and basically when you're at the price of the market, there's a 50-50 probability it will stay there. That's why it's
Yes.
50. And so that's why, and it's a 50-50. It'll be above or below it, at expiration.
Sure.
So therefore, that's why you got 50-50 going on. So what do I do? Well, what I do, we talked about the scanner that I have, is I have a stop trigger built in where I can actually open up an order and say, if this hits 2.75, right? So I wait till I get filled, obviously.
Yeah.
And then when I get filled, if this hits 2.75, then I want you to get me out of the trade, basically, at the market, like which will be right at around $50.
Okay.
Okay.
Yeah.
Because all orders on Nadex are limit orders, so you can't enter if the market's at 75 and you enter an order to buy at 50. Well, you're gonna get out right away. Okay. So you don't want to go in and if you're on the opposite side. So the limit order is this price or better. So if the market's at $75 and I had an order to buy at 50, well, it's going to fill me because I'm sorry, if I enter an order to sell at 50, 75 is a lot better price, right? Because you always want to sell at a higher price, buy at a lower price. So I can't enter that working order to exit unless I use something like a stop trigger. And mine, basically, it's no different than like you'd use on Ninja or Thinkorswim or whatever, where TradeStation just puts any platform
I
out
understand. You're putting it in.
If it hits the price, get me out of the trade.
Right.
And so if I enter at 75, okay, and I exit at 50, then I've lost how much? $25.
Yes.
Right? So when I get filled on one side, I have a $25 prop potential with a $75 maximum loss potential. Okay? But I can have a $25 planned risk, which is what most of us do when we trade.
Which is pretty
futures.
cool. Yeah.
We do planned risk. We do a
Right.
stop loss.
Right.
We don't just hold it and see what happens. So I can basically now, by knowing that I'm going to exit, I have a very solid objective plan. I don't care what the chart says. If it hits that price, I'm getting out of the trade.
Right.
Okay? So I have a $25 reward potential and a $25 planned risk. If things just blow up and I never get to it, I could lose 75. That's not cool, but I at least have a plan. Okay, and that's with all things, and that's why I like using the stop trigger, because if something happens overnight, then I got something in there, helping me out.
Right.
So now we can do that on either side. So now I have no fill. I have one fill with a 1-to-1, a $25 reward to $25 planned risk. Or if both get filled, I have a $50 reward to a $50 planned risk. And they're a higher, it's a very high probability trade. It's in my favor. Not only does the chart speak in my favor based on what we've seen, so that's why we're even considering it. Because if it was a market that was just, anybody's guess, there's no range that I can, see, then, then that's what I probably wouldn't want to do this strategy. But for a strategy where we got this really wide range, it's Monday, so we have all week for this thing to move enough for us to get filled, and there's a lot of premium in there with that big distance apart. And that's a lot of room. So that's 350 ticks. So, or 300 ticks, wide. So 0.001 is what a natural gas ticks in.
Yeah.
So, we have a lot of room. We have a great trade. We have a good probability. And again, I think the original point of this whole conversation was to set it and forget it.
Yeah.
A lot of people talk about, I just don't have time, da-da-da-da. You can set this trade on before you go to work in the morning on Monday. I mean, they open up at 3 a.m., okay, for the currencies and the commodities. You could set it when you get home. You could set it at lunch.
Sure.
And literally walk away, and then that night.
Well, you better make sure. Yeah, that night you better check and make sure that one side didn't get hit. Right.
Right, and if one side gets
because one
filled,
side will get hit first, and then you just hoping the other side's going to get hit also.
Right.
Right.
One side may get hit. So either one side is going to get hit, or neither side is going to get hit, and one side gets hit. You're good. That's good. You want that, because now if it stays flat, goes down some, or goes back the other direction, you have a profitable trade. You have 3 out of 4 scenarios where you can make money on that trade.
I'm going to have to wrap my head around that.
Yeah.
It's spinning right
now. No, I know. We can do a whole workshop on this trade. We could.
Totally.
But we should, for sure.
We definitely should. I mean, if it falls down, basically what you did is I bought a 2.75, and I say I bought it when the market went down to 8. Okay? Yeah. And 2.88 or whatever.
Yeah.
And so
well, we're at 2.88 right now. So yeah,
so
then it went down like 2.8 or something.
Right. So it goes down to 2.8. So it drops down, quite a bit there. It drops down there. I buy the 2.75. If it stays where it's at, I bought a contract that said it will be greater than. A buy is a greater than. The sell is less than or equal to. So on the buy, I said it'll be greater than 2.750. So if it stays at 2.8 and just goes flat, I mean.
Yeah, your risk in losing in this trade just really is that it goes in one direction, just continues and goes straight in that direction. And, what I was saying, once it would hit that level, then you'd basically use your stop.
Yes.
And, the real risk is that somehow you don't set your stop, whatever it is. And then, you have a maximum risk of 75 when you initiate the trade.
Right.
But
so
that would be managing
stays there, I make, I make money. If it goes down to 2.76, and I haven't hopped out there, I make money. If it goes up to 3, I make money.
Sure.
That's a nice trade. It can actually go up to 10.
And that's where you really, that I think I learned the most from these types of trades, for sure.
Totally.
Yeah.
You stay right there, folks. Tommy, Darrell, myself, we're coming back. We got our man Steve from Nashville coming back with us. Dow's down 45, Nasdaq's off 4, S&P's down 4. We're going to be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Darrell Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow right now is down 50. You get the Nasdaq off 6. S&Ps are off 5. And don't forget, folks, you can test drive the Nadex platform. A great time to do it. I mean, the volatility has been out here in spades.
The beginning of the week is the most fun, too, because I like looking at those weeklies. You got 4 days. You can see how they price them. And just like this, we're like, wow, there's, big moves you would have to make right now to get the risk rewards you want, versus some weeks it's not as intense as it feels like, depending on what you...
That's also a 2 deviation, at least a 1 day 2 deviation move.
That's a big move, and that's where I think
that is.
It's really cool when you start looking at it. You can just get a feel for the types, and then breaking it down that critically is awesome when you have like the deviation levels and all that stuff. But I think just in general to understand, you understand the market. You have just like we know where the market traded last week, so you understand the realistic probability of a price point being hit.
Right.
And so just in your head, you're doing a calculation of, well, that's giving me a 25% basically probability of risking 25 to make 75. Like, I don't know if that's happening 1 out of 4 times when we weren't even there at all last week. Those types of quick.
Right.
Yeah.
Which is pretty cool.
Yeah.
There's no doubt. There's no doubt.
So what you think will happen or what you think won't happen, you can trade it either way.
Right.
So, yeah.
And that's where you just get to say, wait a second, I don't think that's a really, I think it should be this. I think it should be, I was expecting it to not be as expensive maybe. And you say, I don't think I want to pay it then. Right?
No,
that's what you're doing in your head.
It was.
Exactly. And notice how I didn't force the trade. I mean, I put it up there. I just put on one contract, right?
Yes.
And I don't have to sit here babysit. I don't have to go, I'm going to take a closer strike. I didn't say I'm going to take a closer strike because I can't get filled.
Right.
It's like I'm just going to let the market do its thing.
Right.
And then I'm going to trade accordingly.
Right.
I'm not going to go – because that's, I think, one mistake I see a lot of traders try to do when they hop in on these is they want to get that fill on these butterflies, And so they'll hop in and they'll get a lot closer strikes. And, yeah, they have the risk-reward ratio, but they don't have the probability because they didn't use the market oscillation.
Well, it was funny,
Darrell,
that I just realized that when you just set up that gas trade, when we were first talking about the NDX trade that I didn't want to do, you could do it that way because I didn't want to do it because I felt it was too far away on both cases.
That's a great point, yeah.
You know what I'm saying?
Maybe we'll have to put together a workshop for this.
I
want to understand it even better.
I just realized that when we were talking, I says, that you just flip your head
I don't want to do this binary because it's too far away, and I don't want to do that binary because it's too far away. It's like, wait a minute, well, that's the binary I need to be doing the other direction.
Exactly. And that's what we set up at the beginning of the program. And I was like, okay, hold it. Yeah. And it probably sets up just around the same deal.
Man.
Do you know what I mean?
Totally.
So
I think we're going to have to do a workshop together on that.
I agree, man. I want to attend it.
I think that's a good idea. No, seriously.
No, for sure. Because I understand it, But that's where you just want to be certain, right? Before you put your money up, and all, you know. So that's where it's cool to be able to completely understand.
Well, we can go through a bunch of different scenarios.
That's something like this. I think you really need to understand it. You need to go through it a few times to be comfortable when you're making that trade.
And that's where, folks, when you test drive it, you can
get that demo.
You can
exactly.
You can simulate it. And folks, you can have a demo and the real one up simultaneously too.
And now the demos are permanent, so they don't expire. So if you ever had one expire on you and you're out there, just call them up. Boom, you get another one.
Right.
I mean, it's just instant. And now you get to keep it without. They don't require. Now it's just you have a demo.
Yeah, which is great. I mean, because something like this.
People go, I don't need to. Like, maybe you have a strategy you like that's working, but when you want to add things on, you always want to demo them first.
Yes.
Right. So this lets you keep learning and growing, and as you get that down and put that club into your, your golf bag there for trading out there, then as you go work on new clubs, you practice first. You go out to, and the range there, and you work on each swing on each club. You figure it out, and I mean that's sort of what we can do. I think it'd be a fun little workshop.
We should do it. Speaking of golf, congrats to the Ryder Cup, right?
Yeah,
USA.
right.
Totally. There we go. Perfect.
Time.
And congratulations to the Cowboys. Got thrown out there.
Congratulations to Tom Brady coming back.
Yeah.
There we go. Perfect.
Okay, folks, thank you so much for growling a problem with us. Thanks, Darrell. Have a great one. Have a safe one. You stay right there, folks. We got some great programming coming up for you. Thanks, pal. Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.